Hello students, so I'm here to explain the question from inventory set 2 question 1. Again, I would have assumed that you had read the question, but if you haven't read the question yet, please pause the video, take some time to read through the question first. So the question starts with some theory questions followed by asking you to calculate the cost of sales and to prepare the inventory account. All right, and there's a few things that you need to remember for inventory. The first one is that in our syllabus, we assume the first in, first out method of inventory valuation. That means that whatever your business buys first, you will sell first. Does this always happen in real life? In reality, no, it doesn't, but it is to make things simpler for you. All right, so first in, first out. Whatever you buy first, you sell first. So that is something that we need to take note of. So the first question asks you to state one reason why Claudia's business would need to keep inventory. Well, the reason why you need to keep inventory is so that you, in the event that your customer wants to buy inventories, you have stock to sell to them. If not, if you have nothing to sell to them, then that would be a problem, right? So you can say to prevent a stock out situation which results in a loss of sales, or you can just directly say so that they would have inventory to sell to customer. All right, number 2, calculate the cost of sales. So this is cost of sales. Now you have to remember what cost of sales is. All right, so cost of sales actually is the cost of your inventory that is sold. All right, it is basically the cost of the inventory that is sold. So now we need to find out what is the cost of inventory that is sold. We go back to our question again. So on 1st of September, they had 60 bags of 2007. And then in the month of September, they bought 2 batches of bags. On 2nd September, they bought 20 bags. And then on 19th of September, they bought 60 bags, right? Now, the next relevant information is that Claudia sold 80 bags. And this is the first thing that students will do wrongly. They say, oh, Claudia sold 80 bags for 5520. This 5520 must be the cost of sales. And then they immediately write that cost of sales is 5520. This is wrong. Let me put little X marks as wrong. Cost of sales is not 5520. This 5520 is not the cost of the inventory that you sold. They sold these bags for this amount. This word here, they sold the bags for this amount. So 5520 is not the cost. If they sold it for that amount, this 5520 is the sales revenue. All right, 5520 is the sales revenue. Now, what is the other account affected when there is a sales revenue? It's either trade receivable, cash, or cash at bank. So, cost of sales is not 5520. So, what is the cost of sales then? We remember again, cost of sale is the cost of the inventory that is sold. So which one has been sold in this case? Now you sold 80 bags, and where are these 80 bags come from? Firstly, first in, first out, right? The first batch of 80 would be here. So 60 bags at 1200 is the first batch, but they sold 80, right? So where's the next batch coming from? This 20. All right. So the 20 bags cost you $1,000. So the cost of sales for 80 bags is these two highlighted in yellow, and that would be $3,700 over here. All right. So we're going to prepare Claudia's inventory account now. So firstly, we start off with the balance brought down. This 2700, this was the balance at the beginning. Now, what happened here is that these transactions took place. You bought some 20 bags on credit from N-Bag shop. What I'm highlighting in this green, I guess, light blue. All right, this $1,000 that's bought from N-Bag shop, and that's where I am recording inventory account increased by $1,000. And then you on 19th of September you bought another 60 bags, and you bought this 60 bags from by check. All right, 3,300, and that's why you have inventory account increased by 3,300 and you paid by cash at bank. Now the next account that we are recording is the cost of sales. So the cost of sales will reduce your inventory account. Inventory account will go down. So inventory account will minus 3700. Where is this 3700? Where does it come from? It came from the cost of sales that you calculated over here. All right, and the balance is 3300. What is the next question? The next question tells you that, okay, so this is 1st of October, okay? On 2nd of October, $900 worth of bags was stolen. Claudia made an insurance claim and the insurance company agreed to compensate $560 on 30th of November. And they asked you to prepare the journal entry to record the required adjustment. So how should you do that? Now, so this $900 of bags that was stolen, right? This is actually the impairment. All right, the impairment loss amount. Because this bag is stolen, you cannot sell it anymore, and it's this amount is lost to you. So this is the impairment loss. All right, but is the impairment loss really 900? Actually, no, because your insurance company agreed to let you compensate $560. So you did have a loss, poor thing you. You did have a loss, but the loss is not the full $900. The loss is actually lesser than that. It is $900 minus $560 because there was an insurance compensation. All right, so you did lose some money. And how much money did you lose? You lost $440. So you're going to record that now in your journal. Sorry, not 440, it's $340. And you're going to record that in your journal now. So you have an impairment loss on inventory. Impairment loss accounting rule is plus minus. You have a lot of impairment loss, so you debit $340 impairment loss. All right, and then after that there is an insurance claim receivable. Now this receivable is an asset because you are going to get some money. That's why you record a debit asset. But the reality is your inventory did go down. You lost $900 of inventory. So since you lost $900 of inventory, we will record inventory minus $900. All right. Finally, they ask you to explain the valuation of inventory in relation, so valuation of inventory in relation to a relevant accounting theory. So in this question, they have indeed asked you for some application. So you need to use your SEA, state, explain, apply. All right, so you state your accounting theory is prudence theory. You explain you should not overstate assets and profits, and you should not understate liability and expenses. And finally, you apply. You apply it by saying that inventory is valued at the lower of cost or net realizable value. All right. So all the best for your mid-year exams, and I hope you are getting on with your revisions. 加油!